Hello and welcome to the Riyal Deal, coming to you from the Al Arabiya English headquarters. This is your weekly bulletin, bringing you all the latest business news, headlines and analysis from Saudi Arabia. Coming up in the programme, as the price of Brent crude rises in the context of escalating regional tensions and fears of disruptions to Iranian oil supply, we ask, what does this mean for global oil markets? We'll be taking an in-depth look at the Saudi banking sector and asking what's behind the sector's robust performance, as well as finding out why the kingdom ranks better than many of its regional neighbours when it comes to financial inclusion. And with the clock ticking ahead of Expo 2030 in Riyadh, we examine the economic benefits this event and its more than 40 million visits will bring to Saudi Arabia. Hello and welcome to the show. We begin with the evolving crisis between Israel and Iran by taking a look at the impact it's having on oil prices. Well, Brent crude has soared and oil prices have risen by more than $10 a barrel during the course of the last few days. This, of course, in the context of those escalations in the region. Well, Iran, which has been facing a barrage of attacks, is also part of the Organization of Petroleum Exporting Countries, or OPEC. And these tensions have been raising fears of a potential loss of Iranian oil supply. Well, when asked if the kingdom would step in to replace any potential shortfall of Iranian oil, the Saudi Energy Minister, Prince Abdulaziz bin Salman, said that the country would only react to realities. Well, let's bring into the conversation Ali Raza, Strategic Advisor at the Saudi Arabia Holding Company, who joins us now for more. Ali, welcome to the programme. What do you read into Saudi Arabia's statements with regard to potential disruption to oil supply?
Tom, it's clear that Saudi Arabia is playing a steady hand, which is a common pattern for Saudi Arabia. If we've learned anything from the geopolitical dynamics and the role that Saudi Arabia intends to play across industry, economy, geopolitics, it's, Saudi Arabia is a nation that wants to make sound decisions for its own interest and those of its partners and those in the interest of the global public. And this is much the same. How I see it is, His Excellency has clearly outlined that we want to make sound decisions that are based on rationale and actual scenarios rather than hypotheticals. I mean, right now the situation is very volatile. We're hearing new headlines from day to day. We, consistently, everyone is on edge about what is really going on. So it goes without saying that the appropriate course of action is to sit tight, evaluate, and make well-validated decisions.
And Ali, what could all of this mean, do you think, for the Saudi economy?
Well, we're seeing a lot of volatility in the oil price, and we know, as much as Saudi Arabia would like to see the nation diversified away from the oil economy as much as possible, it is still largely dependent, or at least driven by the oil prices. So, I mean, in the short term, higher oil prices are good for Saudi Arabia, right? But the challenge here is the fact that oil prices going up and a surplus that arises from conflict, that's not necessarily desirable. Conflict breeds uncertainty, and nobody wants uncertainty. No one wants conflict in the region. So the shorter term impact may be that there's a degree of volatility in the oil prices, and this could have, a very, very small amount of positive impact. Which is, again, something to be concerned about, given that there's conflict in the region. The longer term consideration is what conflict means for the broader economy and the global view of investing in the region. Now, all of this being said, events like this are also an opportune moment to reflect and to remind ourselves about the fact that the entire reason Vision 2030 was put into place was to insulate from exactly this type of fluctuation and volatility in the world, to diversify away from the oil economy, to maximize ownership across sectors, industries, and to drive societal development in a way where it is insulated, the risk is mitigated, and we are not at the mercy of oil prices fluctuating. I think in the nearer term, the volatility will continue. We still don't know which actors will come in or leave and how this will all sort of terminate. So as His Excellency said, I think now is the time to sit tight and we'll see how this all pans out for the economy.
Okay, and just, sorry to put you on the spot on this one, but where could oil prices be heading to, do you think, Ali?
Well, the analysts are saying certainly north of $80, $90 in the nearer term if the volatility continues. I mean, the first day of the conflict, it bumped up almost 8%. Now, there's a particular point of contention here, the Strait of Hormuz, and Iran has in the past threatened to close the Strait of Hormuz, but has never actually acted on it. But analysts at JP Morgan have stated that we could see oil prices go as high as $130 if that were actually to be the case. Now, there is a considerable amount of export that passes through that channel. Aramco has shown a lot of resilience in the past when conflicts have arisen. Irrespective of the conflicts, they've continued to serve their clients across the globe. There is another corridor through which export can continue, and the total volume has not yet been capitalized on. However, 130, I mean, is perhaps worst case scenario, best case scenario, depending on how you look at it. But certainly the 80s or 90s, I wouldn't be surprised if we see this coming forth in the very next few days or weeks.
All right, thanks for that, Ali. We'll be back with you in just a moment. Let's get a brief check of some of the other stories we're following for you now. Saudi Arabia's new artificial intelligence company, Humane, has announced the formation of a new division, which is going to be working on advertising, video games, and film. Well, this new division, Humane Create, was unveiled at the Cannes Lions International Festival of Creativity. Well, Humane, which is owned by the PIF, was launched in May as the new centerpiece of the kingdom's AI effort. The kingdom's new airline, Riyadh Air, has announced a deal with Rolls-Royce for 116 Trent XWB-97 engines. Those engines will in turn power 50 Airbus A350-1000 jets. Well, the airline, which is set to commence operations later this year, has just signed a deal to buy 25 of the Airbus planes with an option for 25 more. Well, also on the sidelines of the Paris Air Show, the Saudi company Avilease has announced an initial order for some 40 Airbus aircraft. This order is comprised of 10 A350 freighters and 30 A320neo family passenger aircraft. Well, the three-year-old company, which is a unit of the PIF, also took out options which could bring the total purchase of Airbus jets to 77. Let's take a listen now to what the Avilease CEO Ted O'Byrne had to say.
I'm very, very pleased to announce an order of up to 77 aircraft, 22 aircraft on the A350 side, and 55 aircraft on the A320 family side. So thank you very much, Airbus, for your confidence. We look forward to building a strong and vibrant relationship together. Thank you.
Switching gears now and turning our attention to Saudi Arabia's banking sector, which is continuing to demonstrate strong growth, highlighting the sector's expanding role in supporting economic activity. Well, corporate lending, which is tied to Saudi Arabia's Vision 2030 projects like new construction and infrastructure, has given the sector a significant boost. Well, the Saudi banking sector's assets have grown by more than 28% during the last 5 years, totaling around 5 trillion Saudi riyals now. Well, this performance aligns with the kingdom's non-oil economic momentum. Non-oil activities now make up more than 50% of GDP, up 20% since the launch of Vision 2030. Well, let's bring back into the conversation Ali Raza. Ali, thanks for standing by for us there. I just want to ask you, I mean, how significant you think the banking sector is as far as the Saudi economy is concerned? I mean, pretty central, isn't it?
Of course, Tom. I mean, the banking sector is responsible for the development of any economic powerhouse. You know, the availability of capital, the flow of capital, it's the sector that will enable every one of the economic development initiatives underway. And Saudi Arabia is certainly no exception. As of last year, the total bank credit was sitting around north of 3 trillion 3 trillion Saudi Riyal, and consistently growing at a rate of around 27% year on year. What we're seeing as well is, and I think this is the really interesting aspect of the financial sector in Saudi Arabia. You have a nation which is rich with resources, that is relatively developed, that is on an very, very ambitious mission to develop a broad range of sectors, to see a number of mega giga projects through to completion. You've got the perfect mix. It's the perfect storm for capital markets to play an accelerant role. We're seeing the fintech sector develop at record pace, for example. I mean, recently, the Saudi fintech Lendo secured a $690 million facility from JP Morgan to lend to SMEs. Earlier on, I mentioned that half of SMEs are now owned by women in Saudi Arabia, nearly half of all SMEs. There's an increase in appetite for starting SMEs. Nearly 2 in 4 Saudi adults have indicated that they would consider starting a business in the next 4 years. So you have this broad base of development and ambition. People are coming to the markets to build businesses. We're seeing infrastructure develop. We are seeing expats come to the region. We are seeing foreign investors come into the region. And the banking sector, not only the current sector that's already in place, the institutions that are doing an incredible job and have been around for decades, but we are seeing now foreign banks, major Wall Street names, set up their regional headquarters in region. So when you aggregate all of these changes and these developments, and you consider that all of that financial power will be flowing through such a broad base of economic and industrial development, and even more so societal development and uprising, that I think is, that's the true reflection of how powerful the banking sector is. Because of course, the capital markets or the financial services enterprises, they are a major contributor to GDP and commercial activity, but combining that with the broad-reaching development that's taking place across the nation, I think that's what we need to look at to understand the significance.
Okay, thank you very much indeed for that, Ali. We'll come back to you in just a minute. Moving on now, the global management consultancy firm Arthur D. Little has just conducted a survey of 18 major Saudi banks. Well, the findings of this survey reveal that while the sector is progressing in many areas, there are some challenges. Well, let's find out more, and we can speak to Rezwan Shafique, who is the principal at Financial Services of Arthur D. Little Middle East, who authored this report. Thank you very much indeed for joining us, Rezwan. I wanted to start by asking you about what you discovered with your report and what it is that make the banking sector of Saudi Arabia different from banking sectors in other countries.
Thanks for having me, Tom. The Saudi banking sector is different in a few ways. One of which is the spread between rural population of banking clients versus the cosmopolitan city-based hubs like Riyadh and Jeddah. They have very different needs, and as a result, the demand of their banks are materially different. What our survey found is that in both rural and city-based settings, you have a customer base that still want a significant portion of their interaction with their bank to be phygital in some way, shape, or form, meaning they want a digital experience, but they also have that relationship requirement with their banker. It's something that's very important to Saudis. Having said that, rural customer bases require a slightly different service in that they are less technologically advanced in terms of digital adoption. They are more reliant on banks, and financial literacy isn't quite as high as you would see in the cities. In the cities, however, you still have people that will say, no, I have a relationship with my bank and I really like that. And there are certain activities there, for example, wealth management, or even discussing a mortgage, that they are not quite yet comfortable in doing purely digitally. They want a part digital experience, perhaps to kick off a mortgage application digitally, but they still want and value the relationship that they've got with their banker, because I think there's a cultural difference in Saudi compared to other markets, which is business is done with a huge amount of trust rather than in a transactional manner.
Okay, Rezwan. I wanted to ask you, given that the majority of the population of Saudi Arabia seems to be pretty digitally savvy, pretty tech savvy, isn't it just a matter of time before Saudi Arabia becomes like other developed markets where people are altogether pretty comfortable online?
Yeah, I think you're on the money there. I think it is a matter of time. Having said that, if you look beyond Saudi Arabia and compare the digital banking market globally, there is a limit to what customers are willing to do digitally. So you're right. Saudi Arabia is probably more digitally savvy with a much younger general population than many other nations around the world. So they know how to do things digitally. They're very well aware of that. But there is a need for a hybrid model where certain discussions that they want to have cannot just be simply on an app. I'll give you an example, right? We found a significant percentage of our respondees for our survey, 35% above, actually prefer discussing their mortgages physically rather than going through an app. These are things that they perhaps find a little bit complicated. They're nervous about it, and what they really want is a human touch. And that's where the key aspect of high touch in a low touch environment really kicks in. And one of the things that you have to really think about as a bank is, how do I service that need of a customer wanting high touch, but leverage the low touch of digital banking?
Okay, Rezwan, that's really interesting. And I also wanted to ask you, how do you think Vision 2030 has been influencing the pace of change in the banking sector there in Saudi Arabia?
Yeah, that's a great question. It's massively fast-tracked, the financial education, the digitization of Saudis, generally speaking, but specifically in the banking sector, is really turbocharged. The transition towards, financial literacy, but also digital adoption, right? Will I see in 5 years' time an environment in Saudi Arabia where there is no banks on the high street? No, right? And I don't think that's the objective that banks should be going for, because that's what our survey is telling you, is that customers don't want that. What they want is continued focus on customer journey, and the banks have done a wonderful job actually in really thinking about customer centricity, hyper-personalization. There's more to do, but they've done quite a bit already. But what they're really suggesting to us via the survey is the back end needs to catch up to the front end. So they're very happy with a digital journey that they've got. Vision 2030, again, has accelerated many things, one of them being is digital readiness. But what they're really frustrated with is the back end, when you go into a bank or something goes wrong on the digital journey, hasn't quite caught up with the investment that they've made in customer friendliness on the app.
Okay, now, Rezwan, there are a couple of challenges that you outline in this Arthur D. Little report relating to the banking sector there in Saudi. There are a couple of them. One of them was workforce readiness. I wondered why you highlighted that. What's the issue there?
Yeah, it's a good segue from my last point. What we really did is we looked at the fact that Saudi Arabia has a really digitally savvy population, but adoption wasn't 100% or anywhere near close to it. So we said, well, what's going on? What's stopping these customers from basically just going full on digital banking? And what's stopping the satisfaction rate, the Net Promoter Scores, to be higher than they currently are across the board? And what we realize is, well, maybe something's going on in the banks as well as on the customer side. Maybe there's a disconnect between what the customers want and what the banks are giving, and vice versa, right? And the the key point that we're highlighting in training is basically with the staff themselves that work in the banks. How digitally savvy are you? Right, so we know that the customers that they're dealing with are very savvy. We know that there's some great apps out there that's really making the digital journey wonderful. But then what happens in the back end is the tools required to give a seamless omni-channel experience for a client, which basically means that, hey, I can go to a web page, I can go to an app, I can go to a branch, and I'll have the same experience or the same level of experience. That's not really supported by the banks, where training is probably lacking a little, where the toolings are quite not there yet, and perhaps the investments in some areas on the technical support side hasn't really filtered through from the digital transformation journeys that banks have put in.
Okay, so that is the challenge of workforce readiness that you highlighted for us there. We won't go through all the challenges you highlight, but let's go to one more. System integration, something that you single out as being a challenge for the banking sector there in Saudi Arabia. How does that challenge manifest itself? What's the solution?
Yeah, it's a great point you picked up on. I mean, if I garnish that with an example, right? I start onboarding myself onto a digital platform and something goes wrong. Right, but so far I've got an online platform where my KYC is done, my ID checks are done in a very seamless fashion. I go into a branch and all of a sudden I need 3 years of bank statements or, it's a proof of address in a very old-fashioned way, if you like, right? So that suggests that the integration of systems that have been embedded into the front end does not represent the same systems that are in the back end when you walk into a branch. A branch customer services representative cannot see what's been happening in the app. And what that basically leads to is a fragmentation of a user experience, right? What they want is a seamless journey, no matter what channel that they're using, no matter what channel that they're communicating with the bank with. And they need to be live, they need to talk to each other, and they need to be up to date in where the customer is within that bank's ecosystem.
Okay, Rezwan. I mean, you carried out a survey on 18 major banks there in Saudi Arabia. I'm just wondering, out of the 18, were there some that stood out as being exemplary, did you find?
There was a few. Absolutely. There are a few that have done some that are further ahead on the user experience side. There were a few that were further ahead on the branch side, as an experience side, if you like, right? But I think what the point that we in ADL are promoting is that we have to think about banking in a different way. It's not just, are you a really good digital bank, or do you have a really good digital experience, or do you have a really good branch experience? You have to have both. So what we're promoting is, a hub and spoke model where you really look at the purpose of a branch, right? And think about, okay, how can I service the needs of the clients that I have today, but also will have tomorrow. So it's that whole hybrid model of, yes, the clients want digital experiences that are wonderful, but they also equally want certain things in branch that are actually quite different to what they use the digital apps for. And at the moment, I don't think we've seen anyone really stand out on all aspects, which is where the opportunity lies.
Okay, what were the report's main recommendations then for the Saudi banking sector as a whole?
Yeah, I won't go through all of them. There was a few, of course. I think the top three is, one, we have to look at the back-end infrastructure and make sure that it's seamless with the front-end apps, right? So we have to have integration. We have to leverage the same systems of front and back, right? So the customer gets the same experience and the customer feels that the bank is in command of their data, command of their account, command of their user experience. The second, I think, is when it comes to the bank employees themselves. We would really highly recommend training and investment in making sure that the digital savviness that we expect of our customers are also replicated internally into the bank, that they have the right tools to service their customers, and they feel confident digitally that they can have a very robust conversation with their clients when there's a problem. And I guess the third is marrying all that together. Look at branches differently. And digital isn't a panacea to get rid of branches. Your customers still want branches, but how they use the branch versus what you're providing in branches perhaps needs to be looked at with a fresh pair of eyes.
Okay, Rezwan, lastly, any quick fixes?
Quick fixes are always hard. It's always on a case-by-case basis. I would say, to be honest, that training your staff, I think, is relatively a low-hanging fruit, right? They are really interested in servicing their clients incredibly well, but perhaps haven't had the training and the investments of time to basically marry these big, large programs that most banks have done on the digital user journey side, right, with their day job. So I think that's quite a low-hanging fruit that I think every bank should consider. If they're not already doing it, why not?
Okay, we're going to leave it there. Thank you very much indeed to you, Rezwan Shafique. Really appreciate you taking the time to speak to us here on Al Arabiya English.
Thank you, Tom.
Meanwhile, the UN Economic and Social Commission for Western Asia, ESCWA, recently published a report which focuses on financial inclusion across the region. Well, perhaps the most striking figure to emerge from this report is this: 64% of adults in the Arab region are excluded from formal financial systems. This means they are essentially locked out of economic opportunity. Well, the data shows sharp rural-urban divides. But the good news is that when it comes to active financial engagement, Saudi Arabia stands out with relatively high scores. Well, let's get more now. We can speak to the ESCWA Economic Affairs Officer, Mario Jales, who's the lead author of this report. Mario, thank you very much indeed for joining us. Saudi Arabia does well in some areas relative to the rest of the region. In which areas in particular are you seeing Saudi Arabia excel?
First of all, thanks for having me here today. It's a pleasure to be with you. And as for your question, one of the main areas where Saudi Arabia has excelled is on digital financial services. It has gone beyond its peers in the region and has achieved very high levels of access to financial services. The recent report published by ESCWA, the annual SDG Review 2025, shows that Saudi is actually a regional leader in financial inclusion. And together with Bahrain, it has the highest levels, the highest scores in the ESCWA Financial Inclusiveness Index. This is a sign that a lot of strong policy, a lot of strong investments in digital infrastructure and digital innovation have been put in place to make this a possibility. Okay, so would you say that's the main reason why the kingdom has done so well in this particular area, in this sort of digital area? So the digital aspect is a big aspect. One of the other areas in which the region does better than some of its neighboring countries is in relation to financial literacy. Financial literacy is, low levels of financial literacy is a major problem throughout the Arab region. But in the Gulf countries, and particularly in Saudi Arabia, while it remains a problem, it's not as widely present as in some of the other countries. And by financial literacy, I mean that a large portion of the society usually does not know how to use financial services. So Saudi Arabia has recognized this early on and has established a program for financial literacy, which aims to educate those vulnerable groups that don't have access to financial services and help them building their capacity in using the financial services. So this is also another area in which much has been achieved. But going back, I would say, to the Vision 2030 that was put in place in 2016 by the Saudi government, that was a major game changer, because at that point, the Saudi government recognized that moving towards a cashless society and investing in digital inclusion was a primary way to move forward in the financial sector. And it's now collecting some dividends from this decision. One of the issues that's raised right across your report, not just with relation to Saudi Arabia, is the idea of underserved communities, particularly highlighting something we've talked about with other guests, the difference between people who live in urban areas, people who live in regional areas, perhaps outside of urban communities. How is the Saudi banking sector reaching out to sort of the underserved communities? Well, one of the ways that this is being done by some banks is, for example, by establishing specific branches that address specific groups. There are banks that have SMEs or SME-centric branches. So by SME, I mean small and medium-sized enterprises. And this has increasingly been successful in reaching out to those small businesses that normally have a problem or have a more difficult time in seeking loans from these banks. And one of the ways to do this is to be more flexible about loan applications and finding solutions that do not match what a standard transaction would be towards traditional larger businesses. And part of this sometimes is related to having loan repayment formulas that are different from the standard ones, which has also been successful in reaching out to some of the SMEs. However, some major problems still remain, and one of them is related to the gender gap. So the Arab region and Saudi Arabia both have a very large gender gap. And by a gender gap, I mean a large difference between the share of women that have a bank account and the share of men that have a bank account. Particularly for Saudi Arabia, only 63% of women have a bank account, while 81% of men have a bank account. So there's an 18 percentage point difference between the two. And this is among the highest in the entire world. So despite progress, we see that the gender gap remains there. One other area that I would cite where much progress is still needed is related to persons with disabilities. So there has been a lot of progress in Saudi Arabia, especially in digital finance. But we see that this digital finance has not always taken into account the needs of persons with disabilities, and accessibility is a major issue. Some recent studies that covered 32 fintech websites in Saudi Arabia concluded that none of them were fully accessible for persons with disabilities. So if we want to really be fully inclusive, we should be thinking of all people, including persons with disabilities. So accessibility should be integrated from the very beginning.
Okay, and just to pick up on what you were saying a moment ago about digital payments, and in Saudi Arabia, of course, has seen a sharp increase in the number of digital payments. I mean, basically, we're talking here of a really good example of the democratization of the banking system thanks to technology.
Exactly. And also behind this, there's an action not only of the banks, but of the central bank and the government by instituting policies that push towards that. So a few years ago, the payment system in Saudi Arabia was much less decentralized, and there was less structure into it. And with the regulatory reforms that have been introduced and the new payment systems made it much more easier across the board for digital payments. And also the complementary actions of the government to bring further strength to the system by, for example, making it mandatory to have digital payment in certain sectors like taxis and fuel stations or retail. So this also has provided some additional push into the digitalization. And one final aspect I could also cite is the government itself in its actions has also been promoting financial inclusion. For example, by making social protection payments or wages conditional on being registered and having a bank account. So this has also pushed for digitalization of the system. And by doing that, encouraging the users to also use payments in their everyday life. So it has been shown by studies that once you receive your salary or your pension through digital services, that you're more likely to also use digital services when you make your purchases.
We're going to have to leave it there. We're out of time. But thank you very much indeed for speaking to us. Mario Jales, lead author of that ESCWA report. Thank you very much indeed for your time, sir.
Thank you.
Well, let's bring Ali Reza back into the conversation. Ali, you were just listening in with me there. And having looked as well at the report, I mean, good to see, isn't it, that Saudi Arabia leading the way when it comes to financial engagement, according to that report?
Yes, of course, Tom. And, naturally this, I would say, perhaps like many others, is a consequence of the broad reforms and economic development that's taking place across the region. We've spoken on a number of occasions about the fact that the Vision 2030 initiative and all of the changes that have come with it span far beyond just industrial and economic development. Although one of the core tenets of the vision is to diversify away from the oil economy, the consequences are far-reaching. There is a specific program, one of the 11, for quality of life in Saudi Arabia. There is a specific program for human capability development. And on the subject of financial inclusion, financial inclusion cannot, the subject of financial inclusion cannot simply be limited to a conversation in which we're discussing the financial sector. It's a life cycle that we have to be conscious of. As of last year, nearly half of all SMEs are now owned by women in Saudi Arabia. And go back just a few short years, in 2017, this number was 17%. Now, this is the SME sector. The labor force participation rate of females in the workforce has increased to a similar degree. The increased participation and active involvement on economic, social, and industrial aspects of society by women, this is having a natural impact on the financial inclusion, which is what we're discussing now. Similarly, we're seeing consequences across the region resulting from other initiatives. There's enormous effort towards developing rural areas into thriving hubs. The Saudi Downtown Company, which is responsible for turning 12 regions within Saudi Arabia into thriving hubs, is playing an incredible role in we hear about Riyadh and Jeddah and all those sort of key places in the mega projects, but there's a lot of work being done around the region. So in the rural areas, we'll see a lot of development of a similar nature. Now, these are all of the things that will contribute additionally to financial inclusion. Our guests previously spoke about some of the regulatory aspects, the social aspects, all very relevant. But I think this development that we're seeing across the nation, this is what's going to drive that ultimate inclusion.
Yeah, thanks for that, Ali. And interesting, isn't it, to see in both of those conversations this issue of differences in attitudes between rural and urban dwelling people, echoed in both those conversations. Thanks for that. We'll be back in a minute. Now, we talk a lot about the year 2030 on this programme. That, of course, in the context of Vision 2030, which is Saudi Arabia's economic diversification plan. But there is, of course, Expo 2030 taking place that very same year. Saudi Arabia's sovereign wealth fund, PIF, has just announced a new unit which will be responsible for building and operating the facilities for the World Fair. The Expo will cover an area of 6 million square metres, close to Riyadh's future King Salman International Airport. And Expo 2030 Riyadh is projected to attract more than 40 million visits. Ali, you're standing by for us there, and Vision 2030 is one part of 2030. Expo 2030, another big part of that year. What sort of a contribution will it make to the Saudi economy, do you think?
Tom, it's estimated that the Expo 2030 event is going to add around $64 billion to the GDP of Saudi Arabia, and directly or indirectly create north of 170,000 jobs. Now, take into account the fact that we are inviting the world to come and appreciate and enjoy and participate in everything that's been going on in the nation, and even more so to come and exhibit their own nations and really, bring a global population together. That in the backdrop of all of the development taking place in Riyadh, across the country, all of the development that's taking place across the different industries, hospitality. It's really, there's the economic impact, which is very, very significant, but the social impact and the societal impact of, this kind of event, I think will be unmatched. So it will truly be one of the most exciting things I think we'll see in the region.
Okay, a very big thank you to Ali Reza, Strategic Advisor at the Saudi Arabia Holding Company. And thanks to you as well for watching The Riyal Deal here on Al Arabiya English. Look forward to seeing you again next week.